Hello everyone, good evening. Can I get a quick audio check? Awesome. Thanks, man. Appreciate it, Denisha. Yeah, looking forward to it. So today I'll be doing a quick market review, going over some things that I saw this week, looking at some updates that I gave you guys in the chat yesterday, going over that, and just going a little more into price action, why I'm making these calls, and give you guys some of the logic behind what I'm seeing, help you guys out. And this may be something I will continue doing moving forward, maybe doing a midweek price action review, give my thoughts, some important updates, depending on the feedback I get from this one. So with that said, we'll go ahead and get right into it. So you guys may recognize this picture here I have up. I sent this yesterday evening, last night, before pre-London session, regarding my expectations for dollar index. So I'm going to go into what I was seeing for dollar, how I expected a lower dollar, reversing my initial bias, how I expected then a higher foreign currency and higher indexes as a result. And then I shared some trade executions in the Telegram, obviously showing where the rubber meets the road. So with that, let's go ahead and get right into it. So for those of you guys that remember, here on Sunday, I gave a upside objective being the mean threshold of the weekly order block being this black line, and that transposes to this line on this hourly chart right here. So I said this would be a likely upside objective, and then I said I wanted to see how price trades there. So I gave higher upside objectives, assuming we closed above it and continued accelerating. However, that's not what we saw. So I'll go into what I saw at those key levels and what made me reverse course to then forecast lower prices for you all today. So here we see that price has taken out the highs multiple times, but we haven't been able to sustain them, the highs. Every time we take out the highs, we immediately reject. And then once I saw we traded up to the upside objective here being the mean threshold of that weekly bearish order block, I then saw we took the high one more time. And then I wanted to see how did we trade above that high. We immediately traded up and then rejected strongly, indicating that we are bearish. Reason being is because we traded up to this premium array. Price is showing an unwillingness to trade higher and sustain the highs, and then we've shown a rejection of the highs, indicating order flow is bearish. So then when I saw this displacement lower, creating a fair value gap, shifting market structure here, I then took my attention to these relative equal lows in here. And then on the daily, you guys will see this small fair value gap in here was another draw. However, this sell side here was plenty. So in here, I said the mean threshold of the weekly order block was delivered as expected. So note how we're rejecting these highs, indicating weakness. So then I took our attention to the fair value gap here and the bearish breaker. And then that set up beautiful shorts into today's session. And then we'll go into some price action. Just wanted to share this for those of you guys that aren't in the Telegram, that you guys can see what I'm sharing. And by the way, if you're not in there, you're definitely missing out. And then over here to S&P. So here I highlighted this discount array being a hourly fair value gap. And then everything else pretty much speaks for itself. Dealing range from premium to discount. That's going to be about the first discount array. We trade down to it. And then because of what I'm seeing on dollar, I'm then confident that we're going to see a nice rally on indexes up to these relative equal highs. So with that being said, that's what I forecasted yesterday. So now let's go ahead and get into the price action. Awesome. All right. So on a daily chart now, let me go ahead and make this full screen. Reason I reversed course from expecting higher to then lower prices. And the great thing is that we're not here Monday morning quarterback after everything's already happened, talking in hindsight. I told you guys we're seeing lower prices, and now I'm going to get into why. So here we have this daily bearish order block denoted by this line here, which is this highest up close candle in this price range. Extend that opening price through. Note how the bodies are beautifully respecting that price level. So the fact that we were not able to close above and sustain these highs was indicative to me that price was weak. And then look at Tuesday's delivery here. We trade right up to the mean threshold of that weekly bearish order block, reject, beautiful delivery, pump up into it one more time, sweep the stops, and then we reject hard. So given that we weren't able to close above that daily order block, I then took my attention to those relative equal lows here that we can see on the daily, which is more clear on the hourly. And then we have this discount array here being that fair value gap. And then we trade beautifully into the bullish order block's opening price to round off the day. So with that, let's go ahead and drop into the hourly now. Okay, so we ran these stops above here, unable to sustain them, and broke down hard. And this is a market structure break because this is a significant intermediate term low. So the fact that we broke this, that's significant. So breaking that then took my attention down to these lower prices here, being that sell side liquidity I shared with you guys. Perfect. So I highlighted the fair value gap, how that would be a point of interest. So why wouldn't I just expect us to keep dropping? You guys know how we do things around here. We need to wait for price to trade up to a premium before dropping the discount. So looking at it here, we have a beautiful optimal trade entry. So every strategy works. Once you know the draw and liquidity, every PD array will be effective. So here we see the optimal trade entry trading up into that key level, because once you know where the market's going, pretty much all the PD arrays will give you the results you're looking for. So optimal trade entry inside of a fair value gap. And then let's look at the breaker that I highlighted in the text. So here I'm just going to look at the bodies for neatness. And then here we see, note how the bodies are beautifully respecting the breaker. So the wicks can color outside the lines, spiking up into that hourly fair value gap, and then rejecting lower with the breakers holding price beautifully. So overall, sound delivery for dollar index today. And then now incorporating some time elements into the price delivery. What do we expect for London? Typical power of 3, open at midnight, manipulation, expansion. So here we see London makes our high of the day, which we forecast in trending markets. We then displace lower. And then here we have that 8 o'clock, that New York kill zone. So what do we forecast? In the New York kill zone, we'll expect some type of retracement to a premium, offering smart money the ability to get in at a favorable price to then ride the move lower for the New York smart money traders. So here we see retracement back up above that yellow line, which is the 50%. Also trading into what key level? We have a bearish order block, this up close candle in here. Price trades into that level beautifully. Why is that significant? Because that's where smart money selling occurs inside of that opening price of that bearish order block. So smart money short here, the New York smart money traders getting short here. What's the draw? What I gave you guys yesterday being that sell side, and then everything past that was a bonus, delivering through that fair value gap here on the daily, which is that blue box, and then into the opening price of that bullish order block. So that's what I was seeing yesterday, and that's how I qualified my bias and what I was looking for. So then, as you guys know, that would make foreign currency bullish. So let's go ahead and take a look at that now. Took a long on euro after shorting early in the week. We were bearish, looking for lower prices, and it delivered that beautifully. Tuesday, printing that high, selling into Wednesday, and then Thursday, switching the bias. Not surprised or caught off guard. We're meeting price exactly where it's going to do what we're looking for, and we're never surprised by it. Why? Because we know exactly what we're looking for and why we are looking for it. So let's go up into a daily chart. So why was I looking for higher euro? Looking at the bodies here, how we were unable to close below this fair value gap. So the wicks colored outside, but the bodies are telling the true narrative. So this, in conjunction with what I was seeing on dollar, led me to believe that we were going to see potential risk on, which would be higher foreign currency, higher indexes, and a lower dollar. So here we see that the body's respecting that level beautifully, and then we pumped higher above these highs here into this inefficiency, into this up close candle, which would be our bearish order block. Beautiful delivery right to the opening price, where institutional selling occurs and where we would look to take our profits as smart money traders. So now with that, let's go ahead and drop into the hourly, and I'll share something here for the Forex traders. So further confirmation of higher foreign currency. Look at the SMT here. So keep in mind, by itself, the SMT means nothing. With the framework that I've already provided of expecting risk on with a lower dollar, then I'm just looking for SMT to confirm a framework I'm already looking for. By itself, it means absolutely nothing. So here we see that Wednesday makes that low in euro, but what do we see here in pound? It's unwilling to make that lower low. And for those of you guys that have been with us for the past couple of weeks, I've been telling you guys that the better shorts would be in euro when we were bearish. So let's contrast that price action here on a daily. And then our producer and content creator, Abraham, here made a really nice reel cutting the portion of the live stream where I covered why I was expecting weaker euro over pound. So be sure to check that out if you haven't. Shout out to my man Abraham. So looking at that, which one's weaker, euro or pound? Obviously euro, and then I shared why we would look at that, so I counsel you to check that out. But if we're expecting the euro to be better for shorts, what would we expect to be better for longs? Obviously pound, and we see a much better delivery on the upside as opposed to euro. So back down to the hourly chart for pound. Okay, so as I said, euro made that lower low. Pound said, nah, I'm not going to join the party. So it gave the better long. So in here, when we saw that dollar was trading up into that premium fair value gap, we then saw the pound trade into this discount fair value gap, setting up the buys into what levels? Where would we anticipate? Well, relative equal highs here, relative equal highs here, and we trade into those beautifully. So what I was seeing there for Forex, beautiful delivery on the upside with what we were expecting, and that's how you can use the frameworks, the drawn liquidities that I'm providing you guys to then use them in your analysis. So our attention back here to euro, we then see displacement higher, shifting market structure here, trading back down into this last down close candle being our bullish order block. But note how the bodies are respecting this blue level, which is that daily fair value gap. So wicks do the damage, bodies tell the story. So here we see the bodies are beautifully respecting that level, giving that optimal trade entry. As I said, London will typically make our higher low whenever we have a higher time frame draw, and then New York will typically offer a continuation. So beautiful trade down into a discount, bullish order block, not quite reaching the optimal trade entry. However, it still does offer discount valuation for smart money longs. So with that, that's all I'm seeing here for euro going into the week. I still suspect higher prices for euro, lower dollar. Looking at dollar real quick. I want to see how we trade inside this level here, which is the opening price of that daily bullish order block. Looking at it again right here. That's this level. I want to see how we trade here, see if we continue lower. Looking at a weekly chart now, let's take all this off. We could potentially trade down to this fair value gap over the next week or so. So that's what I'll be monitoring. So now going into S&P price action. Let's look on a daily chart. All right. So with lower prices forecasted on dollar, that's going to make indexes much easier and likely to rally. So now let me go into a little bit of what I was looking at and why I was expecting higher prices on indexes. Obviously, I can't cover everything. We'd be here all night, but I'll give you guys pretty much the gist of what I was looking for and some additional concepts that I'm using to forecast these things. So as we saw here, the drawn liquidity for Wednesday was this fair value gap in here, and we beautifully repriced to the low end. Beautiful delivery there. But note what the bodies are indicating and telling us. Here we have that dotted line, which is the consequent encroachment, the 50% between these two fair value gaps, the high and the low. Look at how the bodies are respecting that daily fair value gap consequent encroachment. Remember, the wicks can color outside, but the bodies tell the true narrative. So when we see respect for consequent encroachment, that's a bullish price action signature. So on the daily, I was seeing how we traded down into this BPR as well, which is where this fair value gap trades down and it's overlapped. The CIBI is overlapped by a BISI. So here we have two fair value gaps overlapping. So we have a BPR in conjunction with the consequent encroachment of that daily fair value gap, bodies respecting that beautifully. So on the daily chart, I'm seeing this bullish signature, and then I see these relative equal highs here at that 42.44, which is the upside objective I forecasted for you all. And we delivered to that beautifully. We didn't deliver through it. That's typical of pre NFP price action. I'll go into that a little more in the lower time frames and why it's a little frustrating to trade. And that's why I highlighted also in the Telegram, keep in mind that it is non-farm payroll protocol, which means it'll typically deliver in a much more frustrating way and not reach specific objectives we'll be looking for, as it's engineering that liquidity ahead of that news release. Awesome. All right, let's drop into the hourly chart now. All right, so very busy chart. All right, beautiful. So SMT here with the Dow, I'll cover that. So when I sent the picture of the chart to you all yesterday, all we saw was price action trade down into this discount fair value gap. Why do I like that one? Because if we measure from here to here, range PD, the first discount array below this equilibrium is this discount hourly fair value gap in here. So that was the downside objective. And then when I saw a dollar setting up the shorts, and then I saw these relative equal highs here on the hourly, I wasn't expecting those highs to be intact for long. So that was the drawn liquidity, very obvious to us as smart money traders. And then scrolling back even further, we have these highs here. So we see that as buy stops, buy side liquidity, and we're going to expect the market to want to attack those uninformed traders that do not know how to place a stop. So here we see the low of the week on Wednesday. We trade down into that hourly fair value gap, but then look at how we trade from there. We immediately displace higher, creating a fair value gap on that upside delivery. And as I said, that daily candle closed above that consequent encroachment being the dotted line. So I took our attention up here. That's the drawn liquidity. So now how do you use that in your analysis? And how do you start blending all these different analysis concepts so that you can start using them and trading them? So looking here, we're bullish. So if we're expecting higher prices, what are we going to expect? Some form of manipulation. So we're going to expect London to make that manipulation move lower. So it sets up the manipulation going into the New York session. But pay close attention here. Note how the bodies are respecting the hourly fair value gap. So yes, we run for the stops. Wicks do the damage. So we run for the stops and discount. Why is that beneficial to us? Because our attention's up here. So we want to get long where? Below that midnight price here. We want to buy the sell stops and then ride out the expansion move into a premium. So these two lines here are the new week opening gap, the current new week opening gap, and a beautiful delivery. Why do we stop just short of the relative equal highs? Because as I've highlighted, whenever we're looking to trade ahead of NFP, FOMC, or CPI, it'll typically do these frustrating things, which is why we tend to avoid them or deleverage when we are trading. Why? Because normally we would expect price to ramp up into these highs and not wait at all or stall. However, because we have that news release tomorrow, it's going to want to likely engineer that liquidity and keep those stops above there. Why? Because they're going to be utilized in tomorrow's price action. So let's say you were long from here and then you were waiting for these highs to be taken out. Price ripped against you. Why? Because that's just typical pre-NFP price delivery, which is why it's always important to be mindful of that economic calendar and not only see it, but understand how to use it. So as I've said, manipulation below that opening, support here at the fair value gap, bodies respecting beautifully, and then we see that displacement higher trading up into these premium levels. So now let's drop down into our 15-minute. All right, so trying to see what I can take off. Chart's getting a bit busy here, so it's all right. So keep in mind that the dotted lines are new week opening gaps, and the solid line here, and here is that daily fair value gap. So let's keep it moving. So here we have these two down close candles formed during a kill zone. Your high probability order blocks will likely form during kill zones. It's always time first, then price. And looking at these two down close candles here, we want to extend that opening price through, because if we are looking for higher prices, which I shared we were yesterday, we're going to want to see price trade to some measure of discount, more specifically a discount array, where institutional buying will occur. So here we see price stacks up this high here, 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 and here. So what's retail seeing that as? Relative equal highs. They're seeing it as resistance or as a triple top, or they're probably thinking they need to write a new chapter in their retail books being a quadruple top. Whatever, we don't care. We're looking at that as liquidity. That's a bullseye, and we're targeting those less informed traders that allow themselves to be victimized. So we see here opening at midnight, trade down into what level? That bullish order block here on the 15-minute. Inside of that discount hourly fair value gap here in blue, we trade down into these consecutive down close candles and immediately react. So always remember, it's time first, then price. If we were to have traded to these down close candles, let's say at 7 o'clock, it wouldn't be as effective as if we traded down into it right at 9:30. So this is that 9:30 candle. So for index traders, we always expect 9:30 to give some sort of Judas swing. Why? Because that's the opening of the equities market. So typically, thanks for letting me know, Ashley. Okay. Now, can you guys see the cursor now? Oh man, I wonder how long you guys can see that. Okay. Well, we'll get back to it. And if there's anything else I need to cover again, just go ahead and let me know. Awesome. So, okay, here we have these two down close candles. So as I was saying, it's significant because time is always the most crucial element, then price. So here we see we trade down right at that 9:30 opening. For index traders, we would expect some Judas swing, which is a manipulation right at 9:30. Why is that? That's because that's when the equities market is opening. So it's going to give some sort of false move to get reactionary traders off sides. But what's it really doing as smart money traders? We're seeing this trade down below the sell stops into a discount array where smart money is accumulating long positions. And then we see a nice reaction at a price here, displacing higher bullishly. And then so I don't think the mouse was on, so let me go ahead and cover that again. So here we have these relative equal highs here, 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 and here. So that's engineering liquidity ahead of this drop. So that smart money, like we are accumulating here, can then distribute here, 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 and then eventually above here once we attack that tomorrow, which is what I will be forecasting. So we also have a breaker here on a 15-minute. So there's multiple ways to get into these setups. Once you know where the draw is, almost all these PD arrays will form on a specific time frame. So we trade down to the order block. If that's not your entry, fine. You can get long this order block here, which would be these down close candles, trading back into it. We also have a breaker in here, this last up close candle. Let me put this on the top. Awesome. Okay, so why is this a breaker? Because we have low, lower, low. Highest up close candle in this price range would be here. And then notice how we trade above it, trade down into it once, reaccumulation, trade back down into it once more reaccumulation to then send it to premium levels. So on a 15-minute, nothing else left to share here. We do have a breakaway gap where price was unwilling to come down and fill it. So what does that indicate? That's an extremely bullish signature that price action gives. Whenever it's unwilling to come in and refill an inefficiency or reprice it, that indicates that IPDA, the interbank price delivery algorithm, is in a hurry to reprice to specific objectives. And if you ever see that, that's a sign that price is extremely bullish and likely to deliver quickly. And then that's something that I've discussed here before and how I use it in my analysis. And then we see how that played out here beautifully. So let's drop down into the 5-minute. So that's that same 15-minute order block. 15. Hey Zolaman, can you go over euro dollar? I already went over that, brother. So I will go ahead and upload this recording. It'll upload automatically and you can go ahead and check that out. Matt Fox just started the video, and yes, please more midweek reviews, please. Absolutely. If I get some feedback, you know that this is helpful to you guys. This is something that I'll definitely look to continue moving forward. Awesome. Okay. So just clarifying, this line here is that 15-minute order block. Inside of that discount hourly fair value gap, which is in blue. Let me drag this over. So we see our manipulation trading below the sell stops in here. And then note how we reject these lows. We don't trade below it and continuously accelerate. We trade down below it, reaccumulate, and then displace higher. So that displacement is the tipping of the hand of the algorithm. So the fact that we trade higher here, trade above this high, shifting market structure, our bias is bullish. We're looking at this thing higher from a daily, hourly, 15-minute. So now we can go in here in these ultra low time frames, being a 5-minute, 1 minute, and be extremely precise. But the most important thing, though, as always, is the draw on liquidity. Where is the market going and why should it go there? Without that, none of ICT's concepts will be effective, and it's extremely important to have that as your number one quest in your price action studies. So as I've said here, market structure shift, trading back down, optimal trade entry here. So we trade down, optimal trade entry, 3 consecutive down close candles here on the 5-minute. Let's zoom into that. Is our bullish order block on a 5-minute. So we trade down into an optimal trade entry, into a fair value gap, into the consecutive down close candles, making our bullish order block. And then does price spend a lot of time in here? Absolutely not. It displaces higher. So if we are bullish, we want to see higher prices. We do not want to see discount valuation priced at for a long time. We want to see it immediately leave discount pricing as further confirmation for bullish order flow. So we see here we reject the lows, spend a little bit of a time in a discount, reaccumulate inside of these key discount arrays, and then we displace higher, taking out these relative equal highs here, 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 and here, trading above it. And then on the 5-minute, these 3 consecutive up close candles is that 1 15-minute bullish breaker. We then trade above it. Why doesn't price come down into this fair value gap deeper or into this one? Because we have a breaker. It's not going to let it come through. So it's going to trade down, consolidate, reaccumulate more orders, and then displaces beautifully. This gray region is that weekly volume imbalance. And then we have this new week opening gap here. For a current new week opening gap, reprices to the high. These are all take profit levels. You would definitely partial above these relative equal highs here, partial above these relative equal highs, and then definitely partial inside of that new week opening gap. Why? Because it's pre-NFP price delivery, and it will typically do that, which is why I personally don't look to trade it that much, because this is extremely frustrating to me. I like to see price deliver quickly to my objectives, and whenever it fails to do that, I'd rather just wait for sessions where it's going to deliver how I'd like to see it. So we deliver to the high end of that new week opening gap here, right at 3:15. Why am I highlighting the time? Because 3 o'clock is the time that will typically round out and cap the daily range. So I wasn't surprised by this run lower because we're already in a time of day. It's always time first, then price. We're in a time of day that's likely to cap the daily range. So because we trade up to these premium levels at 3:15, we can then expect some measure of internal range liquidity to be taken, and then it runs after the relative equal lows here that were engineered. Why? Because any trader that didn't take partials appropriately, where's their stop going to be? These relative equal lows here and these relative equal lows here, and then they're going to gun for them. And then beautiful repricing from the high end of the new week opening gap, reprice to the low end, and then we trade back into the range and consolidate. So overall, really nice delivery today for S&P. And then Olawale, do you look at consequent encroachment of the new week opening gap for price to react? Yes, sir. So whenever I am looking at any inefficiencies, I always look at, I even break it up into quadrants as well, but I definitely look at consequent encroachment. I don't have constant encroachment labeled on my chart just because it would be even more busy than it already is. But I have these prices on a notepad in front of me, and I'm referring to these key levels. So I wasn't going to drop down into a 1 minute chart, but I guess I'll do that here real quick for you guys. Give you guys some insights into how I'm trading, because as you guys know, I execute on a 1 minute. So this is exactly what I'm doing. This process I'm taking you guys through here. This is my pre-market routine as well. I'm breaking down the charts top down, looking at the draw and liquidity on a daily, hourly, and then I'm going down into the 15-5, 1 minute and refining everything I'm seeing. So keeping in mind here, let me get the mouse back on here. Perfect. Okay. So here we trade down into that hourly fair value gap, which we were looking to support price. We also have that 15-minute order block. Now this is all just on a 1 minute chart. So we create a low right at that 15-minute order block, but then we need to wait for stops to be taken. We see stops taken. We see a displacement here, shifting market structure, long entry number 1. Trade higher, take out these highs, and then we retrace lower. Again, optimal trade entry here, trading down into OTE. Also, that 5-minute order block I highlighted. And then we see immediate responsiveness from price. As I've said, when bullish, we want to see price leave discount valuation quickly. So we trade down into that discount. We displace higher, what? Shifting market structure. There's the silver bullet. Silver bullet from 10 o'clock here to 11 o'clock. We're going to look for our fair value gap entry. Once we understand the draw and liquidity, that's an entry. And then stop could go below the fair value gap candle here. Why? Because we also have this fair value gap here, which if we extend that through also becomes an inversion fair value gap. So we wouldn't want to see price violate this fair value gap here and here because this is inversion and this is a fair value gap. But look closer. We also have new week opening gap low. So there's 3 PD arrays that should not be violated if we're going higher. So it hits it once, smart money's accumulating, hits it one more, reaccumulation, finding support at all the key levels we'd expect, being that new week opening gap, inversion, and fair value gap. And then we run higher aggressively for the relative equal highs, reaccumulate at this bullish breaker. Note here, so bullish breaker, and then what I said, note here, this inversion, fair value gap here, extending that through. Whenever price goes sideways, it tends to do this a lot, especially pre-NFP, pre-FOMC, which is why this price action is just typically a bit more frustrating. I can still call the market, I can still forecast where it's going. I'd just rather not sit in this type of price action. So this is time distortion. But note how the bodies are all doing what? Respecting that fair value gap. What are the wicks doing? Dropping down into the breaker, but the bodies are telling the story, not willing to violate this low. And then we see perfect delivery here, here, and then expansion higher, trades down once more into this fair value gap, offering smart money another opportunity to reaccumulate, and then delivers us beautifully into the premium levels we're looking for. So that's all I had for today with regard to what I was seeing in S&P. Just wanted to break that down for you guys, show you guys how I'm taking advantage of the draws on liquidity I'm sharing with you guys. And these are all things you guys can also do as well. I'm telling you guys where the market's going, where it's likely to draw to. Am I right every single time? No, I don't really need to be. You guys see I uploaded trade history from this week. I'm not right on every trade. I don't need to be, and I can still have a stellar week. So it's all about risk management, psychology, and trade management. So I hope this one was helpful. I'll go ahead and get to a couple questions now, and then I'll let you guys get going and enjoy your evening. Mayoa King, can you look at ZAW USD? Yeah, absolutely. Let's take a look at gold. Okay, so beautiful delivery in gold. So I was sharing how the draw on liquidity for gold was likely to be this fair value gap in here on the weekly chart, and then we hit that beautifully. giving a institutional order flow entry drill. So trade down into it and then look at the response we're seeing. We're seeing price immediately rally higher. So I'm sure the same thing that's jumping out onto this chart to me is jumping out on the chart to you guys as well. These relative equal highs. I definitely believe we have unfinished business here. And then with NFP tomorrow, which is typically a carnival, a circus ride, I would not be surprised to see gold jump into these highs and that liquidity be utilized. So looking at how we reacted inside of this discount level, and it may take until next week to get up to here, but I'm favoring a higher draw as well as a lower dollar. So that intermarket analysis gives us that confidence. And real quick, I'll go ahead and throw this in there. Another reason I'm expecting higher dollar is look at what T-bonds are doing. So we had this fair value gap. And remember what I told you guys on Sunday, if we were to go lower, price should trade into here, get weak, and trade lower. Instead, we traded down to this bullish order block and we're displacing higher. We now closed above this. So further insight into why I was looking for a lower dollar yesterday, doing the bond analysis, looking at interest rates, the whole 9 yards. Then as I had said, that's what makes what we do here elite. So back to gold, as I was saying, with dollar bears seeing a risk on market, I'm favoring gold trading up into these highs. However, I do want to see how we trade inside of this fair value gap. We should trade to and through it and not show any reluctance to get weak in there. Going up to a daily, or down to a daily chart now. Traded lower, accumulated that sell side. Trading down into a mitigation block. Mitigation block being here, high to low. Extend this through. Why is that mitigation? Because it's a low, higher low. If it was low, lower low, that would be a breaker. So we trade down into that mitigation here, here once more, find support. And now we're rallying higher on top of a weaker dollar. So as long as dollar continues to show the weakness, I will want to see price continuously rally. We're seeing bullish order flow on the daily chart. These down close candles, we traded through them, qualifying this as a bearish order block. So I wouldn't want to see this level violated. If we violate these down close candles, that would invalidate my bullish bias. So we opened here, traded down into this fair value gap in here, inside the mitigation block. So that is a institutional order flow entry drill inside of an order block. So I would expect price to continuously deliver higher. However, as I said, I want to see how price trades inside this fair value gap here, this SIBI, and I want to see price trade to and through it and not get lethargic inside of that price range. Hopefully that covered your question, Mayowa King. AB, these midweek reviews are much appreciated. Awesome, my man. I will keep that in mind. Denisha, thanks again. This was really helpful as usual. I appreciate you. Thanks for showing up, and I will definitely continue doing these moving forward. Olawale, glad this was helpful, my man. All right, and I think this will be a wrap. Covered a few questions, shared with you guys what I'm seeing, did a quick midweek review, and this will be something I'll potentially start doing here on Wednesdays for you all. So if you guys like this, be sure to leave a like on the screen. Let me know in the Telegram, and this is something I'll definitely continue moving forward. Appreciate it, Denisha. Don't forget to give the stream a like before you leave. Much appreciated as always. Mayowa King, could you take a look at GJ? Yeah, why not? GJ. GBP. And then the man for the cross pairs will be my associate Tommy. So if you guys want the business on the cross pairs and Forex, he is your man. So definitely reach out in the Telegram and he will get to that as well. So for those of you guys that trade cross pairs, he is the man. So GJ, we are bullish, seeing bullish order flow. Let me go to a weekly. So we've just taken out these highs here. That'll be interesting to see moving forward. Let me see what we have here on the left side of the chart. Okay, so we have buy side here at the 1.75. So 1.175.090 will be the draw for GJ moving forward. So I do see higher prices on this asset, pricing into these inefficiencies here. So 175, and then how we trade above that high determines if we want to trade into the 176s, 177s. So looking at this thing on a daily, we're seeing bullish order flow, down close candles, fair value gap supporting price, fair value gap supporting price, down close candles, trade into them. Price supported beautifully. So as long as we remain above this fair value gap right here, so as long as price remains above this fair value gap in this down close candle, I will expect that 175 to be delivered. So that's what I'm seeing for GJ. Hopefully that helps out, Mayowa. And yeah, with that said, I'm going to go ahead and get going. So I won't be as active tomorrow. So I wanted to go ahead and get on here with you guys, hang out for a little bit, share with you guys what I'm seeing. And I will be here on Sunday as usual for the typical live stream pre-market look ahead. And with that being said, I hope you guys enjoy the rest of your week. Good luck and good trading. And you guys take care. Thank you very much for watching.